Hello, this is Lonnie Matthews. I wanted to go ahead and share with you some information about Chapter 4. So hopefully you have had a great time getting the test done. I look forward to grading that. But this week we're on Chapter 4, and Chapter 4 deals with entering information into the general journal as well as the general ledger. Up until this point we've been using T accounts, but the truth is T accounts really don't exist in the accounting system. The formal way to enter information into the accounting system is by entering it into the journal. So I'm going to share with you some things about entering into the journal and how do we get that part done. All right. Well, first of all, accounting is broken down into different phases. We have what's called the input. That's where you analyze the transaction itself to see where it needs to go. So once you receive a receipt, let's say for the payment of the water bill, that is a source document. And source documents give us an indication that a transaction has taken place and needs to be entered into the accounting system. So again, a source document gives us indication that a transaction has taken place and it needs to be entered into the accounting system. So you will analyze that document and determine where and how it needs to enter into the system. The next thing you do, you will enter it into the system by journalizing it. Journalizing is the actual act of entering a source document transaction into the general journal. The general journal is also known as the original entry point for the accounting system. That's where the transactions are originally entered. So it's also known as the original entry point. Once you enter into the general journal, then you will enter or update the general ledger. The general ledger is a listing of all of the accounts that are in the accounting system. So when you enter into the journal, you'll enter two entries. You'll enter the debit and the credit side. Then you update the general ledger, both debit and credit side, for the two separate accounts. And then lastly, you'll end up doing a trial balance. And you learned in the previous lessons that the trial balance is nothing more than a way for the accountant to verify that debits equal credit, right? So we're going to jump right in and skip on down to entering things into the general journal, for instance. So here we have this transaction that was familiar to us from the previous example when Mary went ahead and started her business. And before, we said that, you got to ask yourself what happened. That's called the process. What accounts are involved? Whether those accounts increase or decrease, right? So we basically took a transaction like this and we did something like this. We entered the $25,000 on the debit side, which is the cash account. And then we entered the $25,000 on the credit side of the capital account. Remember, every transaction has a debit and a credit, right? Now, again, we use T accounts, but T accounts really don't exist. You would need to enter this into what's called the general journal, and that's the original book of entry for all transactions in the accounting system. So let's look and see how this particular entry would be journalized, since we now understand what needs to be done using the process. Okay? So here you can see the general journal is broken up into columns. This is an example of the general journal. The first set of columns is the date column. You would enter the year and the month and the actual day if it's the first line of the general journal. Remember, these are just pages that were used back in the day when they would enter these things into. The next column is the description. Here you're going to describe the accounts you need to use. The next column is posting reference. We'll talk about that a little bit later if we have time. If not, you can read about that. Then you have the debit and credit columns here, right? So for this particular transaction that we're working with, we determined that we're going to debit cash $25,000 and credit the capital $25,000. So here you want to enter the debit account first. Debits always come before credits when you're entering information into the general journal. Again, debits always come before credits when you enter the information to the general journal. So you always want to list your debits first. So cash is the account that we're going to debit. So we're going to write that in the description, far left aligned here. Then we're going to put down $25,000, which is what we were doing to the cash account. We want to debit cash $25,000. All right, the next line, would look like this. You're going to have the credit account now, but notice the credit account is slightly indented. So that's how you know it's a credit. So you always need to slightly indent your credit account. So cash is right on left aligned, slightly indent, and then you put the $25,000 in the credit column. So that is how you would enter that into the general journal. And then if you want to put a description, you can. If we were in a face-to-face class and, we were doing this by hand and you would turn it into me, I would say it's optional because I can tell what you meant to do by using the accounts. So unless you meant to do something else, then you wouldn't use these accounts, right? So it's kind of obvious in that regard. So that's how you would enter a normal entry into the general journal. Now, let's look at what would happen if you had more than two accounts. Remember I said a compound entry, or maybe I didn't, is when you have an entry that requires more than one debit or more than one credit. Remember, it is perfectly okay to have more than one debit and more than one credit in a transaction, just as long as the debit's value doesn't go over or is less than the credit values, right? So let's look at how we would use a compound entry. So here it says we purchased $2,500 piece of equipment, $500 worth of office supplies, all right, for cash on June 10th, 2000, right? So we got a couple of things going on here. We purchased 2 pieces of equipment and we're going to write 1 check for it. So after going through the process, we see that these are the accounts we're going to use, right? We're going to buy office equipment, so we're going to debit that on the debit side, increase that on the debit side, and then we're going to purchase. So here it is. This is what it looks like after going through the process. We got 2 debits and 1 credit. Again, this is also known as a compound transaction. Compound transactions. Just as long as the value of the debits equal the value of the credits, we're still good. So we got the office equipment that we purchased for $2,500, office supplies that we purchased for $500, and we wrote 1 check for $3,000, right? That's what it looks like using T accounts. When we use the same general journal, this is what it would look like using the journal. We have 2 debits. Remember, all debits come before credits. They are left aligned, and then you have 1 credit, which is indented, and so the value of the debits equal the value of the credits. This is known as the compound transaction. Now, once you've entered all of your transactions for a particular day, you're not completely done. You would then need to enter what we call the general ledger. And the general ledger is a set of accounts used by a business that looks like T accounts, right? And so you would have to post each one of these transactions from the general journal. So let's go back here real quick. So you see this office equipment account that we used on this day. You would have to go to the ledger, find the office equipment account, and update that with a debit. Then you'd have to go to the ledger and find the office supplies account and update that one with a debit. And then you'd go to the cash account in the ledger and update that with a credit. So you would end up doing that for every transaction, for every account you use. I realize that this is probably a very tedious process, but thank goodness that we don't have to do that anymore. We have a thing called computers that will do it for us. But this is actually what's happening behind the scenes. All right, so that's the quick lesson on debits and credits. I hope that information was helpful. This should also give you everything you need to be able to complete the discussion question. So good luck to you, and we'll see you next week.